The US dollar staged a tremendous rally in November, but as we move into December, the US dollar looks like it's peaking and starting a correction, and this is starting to take some of the pressure off of other currencies that had been knocked down by the US dollar rally. I wanted to start here with a Bloomberg chart. We're kind of seeing the Fed repeat itself all over again. It had waffled through much of 2015, and then when it finally got to the last meeting of the year and ran out of opportunities to delay, it raised interest rates. Once again, we've seen the Fed waffle all the way through 2016. They've now run out of meetings now for a rate hike, so it looks like the street's 100% thinking that they're going to raise interest rates at this meeting. Interestingly enough, when we look at late 2015, we had a big spike rally ahead of the meeting, and then we actually saw the US dollar come off beforehand. The Fed meeting was about mid-December, around the 15th. The peak of the US dollar was actually on December 2nd. By the time the Fed meeting happened, the market was already starting to correct. It did have a rebound, peaked at a lower high, and then started to trend lower. Why? Because as we moved into 2016, originally people were pricing with the US dollar up here at 100, pricing in 4 rate hikes over the next 12 months. Down here at 95, pricing in 2 rate hikes, and 97.50 or so, pricing in 1 rate hike over the next 12 months. So when we started moving from expectations of 4 hikes in 2016 to 1 or 2 hikes, we saw it come down here. And where was the bottom back in the spring? 92 was the low. That's pricing in 1 rate hike for 2016, which is what it looks like we're going to get. So now what are we seeing since then? We've seen things going up and up and up. Since the U.S. election here, we've seen the dollar index go from 95, which was pricing in 2 rate hikes, to up above 100, pricing in 4 or even possibly 5 rate hikes over the next year. This to me seems a little bit aggressive. I think also the street's starting to come around to that as well. One other thing to highlight here, we're extremely overbought here on the US dollar index. We've got an overbought here, double top. We've rolled over, correction already underway. We are more overbought now than we were at this time a year ago before the last meeting. So the US dollar is looking vulnerable to a correction here. I'm going to show this on the charts here. We're seeing we had a big rally in the dollar. It kind of had leveled off between 101 and 102, and now it's starting to give way. We had it hugely overbought here. It started to roll over. This drop under 70, signal of a correction. If we take out 50 here, signal of a downturn. Potential pullback levels. Well, there's 100 is a round number. There's a Fibonacci level here about 99.75, and then there's this cluster here in around 99.25, and another cluster here down around 98.25. So there is some room for a correction back to a couple of points, bringing us back from, say, expectations of 4 or 5 rate hikes, and then around 98 would be getting closer to 3, which is probably more realistic. We're heading into the last year of Janet Yellen's term. I don't think she's suddenly going to change and become more aggressive. I do think, however, that they'll probably raise rates twice in 2017 rather than once. But to think they're going to go from 1 to 4, I think is a little bit much. Now, that may change in 2018, because in 2018 you'll probably have a new chair at the Fed, and there's a couple of permanent governor vacancies that Trump is likely to fill over the course of the next year as well. So we could see a more hawkish Fed going forward. I think it's going to take time before that implements. So on the interim, US dollars had a massive move. Looks like it's due for a correction. What does this mean? It could take the lid off some other currencies. We're already seeing it with the euro. The euro hit 105 again, double bottom, huge rally up off of that, breaking out of a round and bottom base here. It's cleared 107, up here is about 108. And then 108.80. Look at this massive ascending triangle forming here, base building in sterling. The pound US dollar, big ascending triangle forming, sign of accumulation. It had already been really oversold. It's been steadily trending upward momentum building. Cleared the 50-day average already. It's hanging around here about 127. Next resistance around 128, then 130. Gold is still really depressed here as political risk has eased a little bit. The capital has been coming out of defensive havens. It's come out of gold. It's come out of the yen. So we've seen gold get crushed. We've seen dollar-yen spike, because this spiking means the yen went down. What have we got now? Gold is quite oversold here. Did however, retest this 1155, and it's back up hanging around 1170 here. Dollar-yen keeps running into resistance at 115. Massively overbought. We're starting to get a lower high. This upward momentum looks like it's peaking here as well. Peaking in dollar-yen, peaking in dollar index, gold and then we're seeing oversold bottoming out of the gold, bottoming out of the euro, bottoming out of cable. So overall, it looks as though this trend we've seen of a huge gain in the US dollar at the expense of everything else looks like it's starting to reverse. It doesn't look like traders are going to wait for the Fed meeting either. It looks like this is starting sooner.